Hi, this is Michael Carlin, president of Henry+Horne Wealth Management with your Manage the Funds podcast. Today, we're going to tackle life insurance. And the interesting thing about life insurance is that so many people have it. Everyone thinks about it, talk about it, but do you know how to buy life insurance? Do you know how to do it the right way? Have you ever wanted to learn a little bit about the industry in general and how it works? We're going to break it down, hopefully in about 10 minutes or so, in terms of what's going on in the life insurance world and how to make you a better and more aware consumer of life insurance in general. So as we dive in, the first thing I want to talk about, the big picture, is the terms, because there are so many different terms about life insurance in general. One, and the most important, is death benefit. Death benefit is the amount of money that you'll receive in the unfortunate event that the insured passes away. So if I'm working with Mr. Smith and Mrs. Smith, and we decide that we go through the whole process, which we'll talk more about, that they need $1 million worth of life insurance coverage. That coverage is death benefit. That death benefit is that $1 million is the amount that the surviving spouse will receive in the event that someone passes away, that $1 million. So that death benefit is the first and most important term that I'm going to want to make sure you know and understand very, very quickly. The second is premium. And the premium means, well, how much am I going to pay every year? It's a super critical function, obviously, because from a cash flow perspective, we want to pay the littlest amount possible, and that's just always the case with life insurance. Yet, you're going to find out that premium, or the amount that you end up paying every year, is going to change dramatically from policy type to policy type. So cheap doesn't always mean it's what's best. Cheap sometimes really just means it's an inexpensive life insurance policy that may not be suitable for you and your family or your needs. We have to make sure, like any good medical diagnosis that you get from a doctor, we're going to want to have the same kind of quality diagnosis that goes into understanding how much life insurance you need, what's the death benefit amount, how much the term or the duration of the policy, which is actually the third term word we're going to need to define. We're going to want to make sure all the facets of your policy work really well for you and your family. So again, there's term. Term is, well, how long does a policy last for? It's confusing because some policies are term policies and they're telling you right up front, oh, this policy is going to last for 10 years, 20 years, 30 years. It's some set period of time. Term policies are great for most, not always for everyone, because it covers you for a certain period of time. So let's just say we know that between now and a certain point in 20 years' time, we're going to need an insurance coverage. And we'll talk a little bit more about some of those scenarios and what they might be. But if we've got a 20-year period of time, we know we need insurance, and $500,000 is the number that we come up with. You can buy a 20-year term policy saying, I'm going to get covered from now to 20 years from now. I'm going to have this $500,000 of coverage. And when that term expires, when the 21st year, the insurance is no longer there. And you're going to have the ability to get all the coverage you need from the window that you want it. And one of the things that people don't always tell you is that with term policies is that even after a term expires, they'll still let you renew. This is kind of a little industry secret, but it's usually at an extraordinarily high rate. It's a level rate, the term policy, for a while. You own it for a certain period of time, and then when that term expires, the rates are significantly higher. But again, term is the amount of years that the policy will last for. A beneficiary, you got to choose somebody in the event you pass away. Who does it go to? That's your beneficiary. And we're going to go ahead and dive into how much life insurance do I need? When you're doing the how-to and you're trying to figure out, well, geez, what should I do with life insurance? The first question we've got to answer is, well, how much? Let's do the how much and what for. And there's a variety of different reasons. There's a variety of different personal situations. Let's just say that you're married and you want to leave a financial cushion for your spouse. You would look for life insurance for an income replacement. We can make up a scenario. There's a husband and a wife, and they both make $100,000 each in this case. So if one of the spouses were to pass away, you have a choice. Am I going to reduce my my standard of living because now I went down from $200,000 of income to only one? Or am I going to buy a life insurance policy to replace that lost income? And for how long do I want to have that lost income replaced for? In that case, creating a financial cushion for your surviving spouse, you can easily define a certain dollar amount to say, here's exactly what we need, and here's exactly how long we need it. That's a good case in point. It's completely different if you've got kids, little ones, and think about it, where you have a 2-year-old and a newborn, and if something were to happen, how are those kids going to get taken care of if we lose a wage earner? Or if that wage earner is the primary wage earner, how are we going to take care of those kids? And what we do is we go through and we have a lot of factors for how much childcare cost is, and you do some scenarios to say, well, here's how long it should go for, to accumulate how much life insurance I need. There are so many other reasons to have life insurance coverage, just other than for surviving spouse and replaced income. It could be, and it should be, to pay off any and all debts. I typically like to structure life insurance policies for clients where if there's a mortgage, I like to make sure that mortgage is paid off with life insurance. For me, what I find is that when you're dealing with a surviving spouse and they lose a spouse, it's such a tough situation emotionally to deal with. And if you can improve the cash flow dramatically by eliminating a mortgage, it's one significantly reduced stress and anxiety point that can make the financial planning process so much easier. So paying off any and all debts, it could be student loans, it could be a mortgage, it could be credit cards, but you're going to want to have some kind of policy to make sure that slate is wiped clean. And this is my opinion, and that's how I would structure it. You can also have a life insurance policy for things for charitable reasons or other people you need to take care of, brothers and sisters, those kinds of things. Obviously, there's a whole other slew of life insurance, which we can't cover today, which are employee-employer related. We'll get to that at some point, maybe, but not for today. Let's just go big picture on how we do life insurance and how we get it done appropriately. So once you've understood a little bit about what do I need the life insurance policy for, you're able to figure out, well, geez, my kids are only going to be young for so long. And then at that point, well, I don't need the life insurance anymore, if that's the case. And at some point, I'm going to pay off these debts. Those are some reasons where you say, well, geez, in those scenarios, I only need insurance for a set term period, a certain number of years. You may need policy coverage forever to take care of a surviving spouse to replace income. So when it comes time to get quotes, you're going to want to understand how much you need and how long you need it for. We're going to go with term life because it's the one that's most heavily advertised on TV, where they talk about all these cheap quotes. A healthy young woman is able to get hundreds of thousands of dollars of coverage for $5 a month. It's always something spectacular. That's term life. It's always a very set period of time. So when it comes time to get quotes, there's a lot of different places to get term life quotes. There's some of them you can do online. Anybody that sells life insurance can get these fairly easily. What you want to make sure is when you're getting a term life quote, that you have a bunch of companies, a bunch. There are so many that offer term life. You're going to want to have 15, 20, 30 of them on one spreadsheet so that you can see who's offering you the best term life quote. Because it's fairly, these companies, they often rotate in who's the best and who's the cheapest. If you want to get a whole life quote, something that's going to last you to age 100, because your need for insurance isn't going to go away, now you need to work with an insurance agent. There may be places where you can get it online, but in my experience, you're going to want to have an agent that's going to help you walk through, because now you're starting to get to a whole different level of complex insurance policies that exist in different underlying investment vehicles that operate very differently than term life, because these things can grow and have cash value in them. So policies can grow and have cash value. You're going to want to make sure you understand the inner workings. And again, it's not always about the cheapest premium. So when you're laying out even a term or a whole life policy, you're going to want to, you can certainly look at both. One, again, should cover you to age 100, one for a certain period of time, and you don't always want to select the least one. You want to make sure you have it matching your total needs. It's not about the cheapest premium. So the application process when you're doing this process of life insurance is fairly straightforward. You complete the application, you schedule an exam. And what we're going to want to make sure of is that when you're scheduling an exam, make sure you are not going out and drinking heavily the night before. You're going to want to make sure that you're not around a lot of cigar smoke and cigarette smoke, the days leading up to it. You're going to want to make sure that you're also fasting the morning of, because you're going to want to come up with a very accurate reading of your cholesterol, an accurate reading of what your blood levels are. And the process of underwriting takes some time. It can be a few weeks. It could be a month. It just depends. And it also depends on what they find. The underwriters will look at all of your information from your driving record. They're going to look at, in some cases, they're going to look at your credit rating. They're going to look at the exam that they just took and what your blood looked like. And they're going to look through all the different doctor's reports and say, well, what happened? Actually, and they may even follow up, say, you went to see Dr. Smith, and Dr. Smith said that you had something on your skin that had to get cut off. Whatever happened there? They're going to want the complete picture of your total medical situation before they're happy to provide you with a final answer. They're going to look at things like family history. What's interesting is that the way that technology has changed things is that it used to always be the basics where you needed a blood, urine, and in lots of cases an EKG in order to get a life insurance policy. And that's still true today, but more and more we're seeing that insurance companies are relying less on those initial exams and doing more due diligence on every piece of information they can get on you. So you may not even have to take an exam in order to get life insurance. They're just going to look at what you've already got. So you're going to then get your underwriting. You're going to find out what happened. Did the quote come in as what you were expected? You're going to have this illustration that said, well, geez, I thought my $1 million to term life was going to cost $1,000 a year, and it came back $1,400. What happened? In that case, it will say, oh, geez, you were a standard plus, you were a preferred minus, and they could have other issues, which you could, in many cases and situations, argue with, fight, and get an improved result. But if you don't get the result that you wanted, this is a super trick for you and a big tip. You're going to want to make sure that you go to a number of carriers and have them compete for your business. Yes, you can do that. Well, just because you're rated standard plus here doesn't mean you're not preferred minus over there. Doesn't mean you're not preferred somewhere else. And it just depends on a lot of factors. Sometimes insurance companies are competing for business. Sometimes they want new business. Some will view your family history one way. Some will view it another way. It's just something that you should have and be prepared for, to have multiple carriers shop, no matter what policy or policy type you're getting, so that you can get the best premium. This may be a reason why you would want to work with an agent. You could probably still do it on your own, but get multiple quotes because you never know what they're going to find. And once that's done, once you've gotten the right underwriting, you've figured out the amount of insurance, again, you've figured out the term the length and the duration of the insurance that you have to have, go ahead, pay the premium. You're ready to go. Your life insurance policy is yours. So with that, don't forget to pay your premiums, by the way, because they will cancel you. With that, if you have any questions or would like more information, certainly reach out to us at managethefunds.com. As always, this is Michael Carlin, president of Henry+Horne Wealth Management. Thanks so much. Take care and have a great day. Material on this program is intended for general information only and should not be taken as specific investment, tax, or legal advice. None of the information contained in this broadcast is intended by the host to be a solicitation for sale of any security. Further information is available by contacting Henry+Horne Wealth Management. Securities offered through Independent Financial Group, member of FINRA SIPC. Advisory services offered through Wealth Management LLC, DBA Henry+Horne Wealth Management, a registered investment advisor. Henry+Horne Wealth Management and IFG are separate and unrelated entities. Henry+Horne and Henry+Horne Wealth Management are separate entities. Member of FINRA and SIPC.